Hey folks, welcome back to the Rupedia world, and I am Abhinay Gupta. And today again we will continue with the appointment and remuneration of managerial personnel. Right? So in the previous lecture we had discussed in detail about the remuneration portion. Right? We dealt with section 197 where we saw the various limits of your remuneration. The total maximum is 11%, the 1%, 3%, 5%, 10%. All those limits and at what situation, what circumstance are they applicable, whether individually or in totality and everything, right? So we discussed a lot of things about the setting fees, about the remuneration for other services, right? What are the modes of remuneration, the modes of payment of remuneration. All these things have been covered in the previous lecture, right? So now what do we cover today? Today we'll have to move a step ahead. Today we'll understand that okay, once the remuneration has been given, right? But is that all? What if you give an extra remuneration? What if something goes wrong? Right? So there are a couple of more sections that we'll be covering today, and that will include or that would start with 199, which is the recovery of remuneration. So what do you mean by recovery of remuneration is the first thing you need to understand. When there's a term called recovery, means something has already been done and then you recover it back. Right? When we talk about recovery of remuneration, means you have already paid the remuneration and now you want to recover it back. Right? So when you are recovering something, right, first of all, what are you supposed to know is when will that situation arise that you need to recover. Right? So when you get ahead with the recovery of remuneration, first thing we need to understand is when is this section 199 attracted. Right? So this section is attracted where a company is required to restate its financial statements due to few reasons. Right? So the financial statement that I have already prepared, in that financial statement, if I look into the P&L column, my expense side will also include an expense of the remuneration that I have paid, right? But now there is a situation where I have to reinstate my financial statement. And why am I supposed to reinstate my financial statement is because there has been an evidence of fraud, right? Or if there is no fraud, there is a non-compliance with the requirement of the act, right? And plus the rules that came after that. So Act of 2013 plus Rule of 2014. If there is a non-compliance of any of those things, your financial statement may have to be reinstated. Right? And that is when your recovery of remuneration also begins. Right? So when we talk about recovery, so first we know, okay, when do we recover? The situation of recover will occur only when the financial statement needs to be restated. Right? Now, from whom will you recover is another question. Right? So you will be recovering it from somebody to whom you have given in the first case. Right? So whom have you given it? So in the past you have given certain remuneration, or in the past or in the present, some remunerations have been flowed out to the managing director, to the whole-time director, to the manager, chief executive officer, whatever name called, all these people, right? You have given them certain remuneration, right? And these remuneration were given to them in the year or during the tenure for which the financial statements are now required to be reinstated. Right? So the financial statement, for what period you are reinstating the financial statement, in that period to whomsoever you have given the remuneration, you recover it back as per section 199. Right? And what is the amount of recovery? So do you say, okay, his salary was rupees 20 lakh per annum, so we recover 20 lakh per annum, we are not giving you anything. No, that's not the scene, right? So any amount that you have paid, right, to any person as remuneration in excess of remuneration, which would have been payable to him as per the reinstatement financial statement, the reinstated, right? So I prepared a financial statement, right, and somehow it was proved that my financial statement that I prepared was either fraudulent, right, or there is a non-compliance with the requirement of the act and the requirement of the rules. So in the case of this non-compliance, I think my financial statement needs to be reinstated. Now when I am reinstating the financial statement, so as per the reinstated financial statement, we calculate a new remuneration, which is different from the previous one. So if I have paid anything in extra during the time I paid them the remuneration, and as per what was reflected in the previous financial statement, right, I will have to equate it to the new reinstated financial statement. So if there is anything extra I've given to them, I'll have to recover it back from those people now. Right? Whatever extra has been given to them will be recovered now. Okay? That is all about the recovery of remuneration. Amount discussed, from whom discussed, and why discussed. Next section is the CG or the company to fix the limit with respect to the remuneration. Right? So now what is the amount of remuneration you want to give? What is the amount of remuneration any company can give ahead? That limit will be fixed by the central government and the company or the company. right? Now, one more thing that you need to understand in 119 is that the liability to refund the remuneration, right, that was being built up, the amount which was calculated under 199, it shall be an additional liability, right, that is based upon them. So this shall be in addition to any liability which is incurred under the provisions of the Act and the other law for the time being in force. Right? You will not include it in any other liability. You will not club it. That okay, these were the liabilities, let's club it in either this head or that head. No. You will open up a new head for that. That this is the head. Right? So that in the financial statement also you know, right, where has the differences been settled. Right? Now when you talk about the central government or the company to fix limit with respect to remuneration, we refer to section 200 of the Companies Act 2013. Right? So while they are according the approval, the central government and the company, right, while they are according the approval. So when we say that the central government or the company is to fix the limit, right, there are certain things they need to see, right? So while they are taking decision with respect to section 196, which is the appointment of the managerial personnel, or section 197 that deals with the remuneration, in that case they will also have to give due respect to the inadequacy of the profit, right? So suppose there's a situation where the company is going through an inadequate profit or no profit, then at that point of time the remuneration which is fixed by the central government or the company, right, the limit that they have fixed has to be as per what is provided in the Act, right? It should be such amount or percentage of the profit of the company as it may deem fit, right? And when they're fixing this remuneration, there are certain parameters that they need to understand, the factors that they need to consider, right? So what are they? Number one, they'll have to see the financial position of the company as of now. So if they understand that, okay, as per the financial position of the company, this is what I think is reasonable enough to give out to the managerial personnel, because rest will be required, right? The financial position may not be going very good, so you'll have to set up a limit to the remuneration, right? The remuneration or commission which is drawn by an individual concerned in any other capacity also has to be checked. So there's Mr. A who is here in one capacity of maybe a managerial personnel, maybe an MD, right? He's also there in some other capacity with the company. So in some other capacity, what is he receiving is also a matter to be considered while fixing his remuneration, right? Now they'll also see, is this person receiving certain remuneration from any other company? If yes, then that will also form the basis of deciding as to the amount of remuneration. Maybe they're getting very less over there, you want to give them a little more. Maybe they're getting good amount over there and you think you can reduce it over here. Whatever be the situation. But the concern is that they will give due regard to these parameters, right? They'll also check his professional qualification, what is the experience that the individual has, right? Like if there's a new person, not very highly qualified, not too much experienced, you don't digest the fact that you're giving them a handful of remuneration, like too much of remuneration, right? Yeah, there is a person who has a lot of degrees, I'd say CA, MBA, CPA, this financial analyst, that, a lot of things, and then has an experience of 25 years as well in this field. It is worthwhile giving that person a little more remuneration, right? And if there are any other matter which are prescribed from time to time, they'll also consider those matters to decide the amount of remuneration and to fix the upper limit for the same. Getting the point, right? Next section, what we have: forms and procedures for certain application. The section 201 of the Companies Act 2013 will deal with the forms of the procedure in relation to certain applications, right? So when we discuss about the procedure for making an application to whom? Application to central government is what we need to check, right? So whatever application you are making to a central government, to the central government under the chapter 13 X 111, right, which comprises of the section 196 to 205, the entire chapter, I mean. So every application that you're making to the central government, that shall be in the form which is prescribed, right? So first you came to understand is that the application will be made to the central government. The second thing, that it will be in a specified form which is already prescribed, right? Now when you're giving a notice, a general notice, right? So before you make that application to the central government under whatever chapter you're deciding of this act, right, they shall be issued on behalf of the company a general notice to all the members that are forming part of this, right? And in that notice they will indicate the nature of the application which is proposed to be made. So what are they trying to apply, right? So they're trying to apply to the central government, but what are they trying to apply is communicated to all the members via a general notice, right? And that notice which they have prepared, right? It's not necessary they're sending it, but there are two compulsions still, that the notice should be published in the newspapers, and two newspapers basically. One which at least one is in a newspaper in a predominant or a principal language in that district where the company's head office is established, registered office is established, right? And one other newspaper that is in English, which is circulating in the same district. These two parameters have to be considered by them, and this is how they leave out the general notice to the entire public, right? So, and the copies of the notices that they have sent or they have printed, right, that together with a certificate by the company as to the due publication thereof shall be attached to the application. That, look, central government, we have already published the notice in the newspapers that okay, this is what we are going to apply to you, and this is the form, and in this form please on the backside find attached the entire publication, the general notice that we have given to the public in general in the same district, right? So that is it. Next, the last section that we'll see today, right? Yeah, there are a lot of case studies also that is pending, my students. So there are a lot of case studies also pending. We have been doing sections and sections and sections, but I don't know how much is it seeping into your head, right? So let me do one thing. Let me complete this lecture with giving you knowledge, giving you the top up of the sections, right? And after this, in the next lecture, I'll be picking up a lot of case studies. So next one or two lectures will be dedicated to the case studies, right? And if you remember, initially I planned that after we complete the entire syllabus, right, it is definitely not going to be for this examination, but afterwards we will also review, or I'll also let you understand and know the question answers that are given in the practice manual, right? So when we are revising those questions answers which are given in the practice manual, it becomes a very quick revision, right? And you relate to it. So when you're just reading it out, it's just your mind and your eye that is focusing on it. But when you actually go ahead to into a discussion, right, when I explain the entire question answer, what help will it make actually is that you have a visual in front of you, right? So your one sense organ, that is eye, seeps it in. Second, you hear me talking about it. So two ways, right? Third, you apply your brain when I ask you questions over there, right? It does not become monotonous reading it from the book and skipping points. Rather, I'll give you those points and block them out in your brain. So that is an attempt that will be made after this May attempt, right? So that's a long-term thing. But as of now, for this chapter also, because I know there's a lot of haywire things going on, you know that, yeah, this is the section, but what is the applicability of the section? Where do you link the section, right? I understand these problems pop up. So there are certain questions that has been asked in the examination previously, right? So I'll give you a brief of those questions as to what is the crux of the question. If you want, I can read out the question in the lecture as well, and then we'll discuss as to how is it supposed to be answered, right? What are the answers and what are the different cases? How do we identify? Those things we'll be discussing in the next two lectures, right? Case study regarding the same chapter, right? Because there are a lot of case studies, right? There are a lot of calculations as well, numerics, because we have seen a lot of percentages in the previous lecture, right? So we'll go through all of those, right? We'll discuss it in detail, but today let's complete with section 202 first, right? So what is 202? 202 is compensation for loss of office of the managerial personals, right? You know, right? The loss of office can occur due to a lot of reasons. A person passes away, loss of office, retires, he's caught guilty of misconduct. There are a lot of things for which we would have to vacate, or we would have to chase that person out of the office, right? And there can be other situations also where without their fault they need to vacate the office. So in what situation, what do we do and what are we supposed to do is something we'll see in this section 202, right? So understand, where a director is removed in breach of his service. So he was there in service with us, right? And then we remove him, right? Then do you think it is just for that person, right? He's removed, maybe the contract is terminated, or just because we breached the contract or something, we just remove the person, and the company is obliged by the service contract to pay a compensation to that director, right? Because when they're taken in, there's a contract happening which will secure the position of the director, so that if there is something wrong happening with him, he is entitled to certain compensations, right? So first let us see what are the circumstances in which compensations can be paid. So first, payment can be made to a director by way of compensation of loss of office to a director, which is removed under section 169, right? So you were holding your position as a director. As per section 169, we remove you from the directorship, so you will be entitled to certain compensation for loss of that office, right? You will also receive compensation for loss of any other office that you lose because of losing this position. Maybe we remove you as a director. When you're not a director, you cannot stay a managing director as well, because managing director is first a director in the individual capacity. So with your vacation of this office, you also vacate the other office. So along with your compensation for this, we'll also hand you over the compensation for the loss of the other office, right? Because even that terminates along with your this current office, the office of director, right? Or as a consideration for retirement from office, right? So these are various compensations, various circumstances on which we pay compensation to the managerial personnel. Now, when we talk about whom to pay the compensation, right? So this compensation will not be paid to any ordinary director. Mind that it is not to be paid to any ordinary director, but it is made to be paid to the managerial personnel. So it can be paid only to a managing director, a whole-time director, or a manager. Because understand, when we start with section 196 and end with section 205, this entire chapter, right? In this entire chapter, we are considering and we are discussing the managerial personnel, right? So automatically understand that if there is any of the sections between 196 and 205 that is asked in the examination, you automatically know that you are talking about managerial personals and nobody else, right? Now there are certain prohibitions from compensation as well, right? So there are certain cases where there will not be any compensation that is paid to the director, right? First, if the director resigns voluntarily, right? So today a director is there and director says, listen, I don't think I'll continue, maybe I'm shifting somewhere else or I've stopped working, right? The director wants to go corporate free, the director wants to enjoy the life, right? Because in corporate you don't have the work-life balance. The director says it's enough, I have spent my life, saved nothing, but I need to retire, my child is earning, right? Whatever be the scene, I'm just getting on that end. The point is, if there is a voluntary resignation, the director will not be allowed to compensation, right? Or if the office of the director is vacated by virtue of section 167, even in that situation, he is not allowed or not entitled to any compensation, right? If there is a negligence on the part of the director, or there is a default on the part of a director, and for that purpose the company is being wound up now, or is subject to certain supervision of the court, right? So that is to an extent, to a large extent, right? So he's impacting the company in that situation because it's your fault, because of which the company is suffering. The company will not give you any compensation in that sense, right? Now there's another situation also where a company is amalgamating, or there's a merger, acquisition, something, and you were the director of the old existing company. Now the company either gets into the new or converts into new or something. The legal identity changes. So from the old company, you will definitely have to vacate the office and rejoin the office in the new company. So for this shift, you will not say, okay, I lost that office and I need compensation. You're just being shifted. If you remove the corporate veil and look behind the matter, you see that the director is only shifted from one to another. That is not a loss of office in any case, right? Now, if there's a situation where the director is guilty of any fraud or breach of trust, right? Or there is a situation where the director underwent a gross negligence in the conduct of the affairs of the company, right? Even then, you're not allowed to be given any compensation, right? And understand, it is not just the negligence and the fraud in his company, it can also be done in the holding company or subsidiary company. In all these situations, you will not be receiving any compensation, right? Or if there's a situation where the director himself has insisted, right, or is directly indirectly responsible for the termination of his directorship. Understand, this is not voluntary resignation, right? He is responsible for termination of the directorship. Then he will not be allowed to any compensation for the same, right? Now, what is the effect of winding up on the amount of compensation? Do you think there's a difference in the amount of compensation in the case of the winding up of the company? Understand, there's a situation where there cannot be any compensation or any payment made to the director. There are two situations like that, right? Or two conditions. If it exists, the director is not entitled to any payment. So if the winding up of the company commences within 12 months of the cessation of the office of the director, like today I'm a director, today I cease to hold my office, and in next 12 months, within next 12 months, the company goes for liquidation. The company goes for winding up, right? So you will not be entitled to any remuneration or any compensation for that case. or before the expiry of a term, if the company goes for winding up, you will not be receiving any compensation. That means if the company is being wound up, the directors do not receive any compensation for the loss of office, right? But if there is any surplus which is remaining after winding up, right, and that is not sufficient to repay the shareholders, the share capital, right, then that is contributed by them. Got the point? So these are also certain points that we need to understand, that yeah, these things also exist as per section 202, right? The last thing is the restriction on the quantum of compensation, right? How much compensation will be given to them. So understand, the period for which the compensation will be calculated will be the lower of two. One, the actual period that is still remaining, right, before his actual retirement. Maybe today a director is removed from the office, but if he would have continued, he would have continued the office for the next 6 years. Right? Then for those period of 6 years, you will have to compensate that person. But before compensating him for 6 years, you will check the second condition, which says a maximum period of 3 years. So whatever be his salary for 3 years, right, and that is what he has earned in the previous 3 years, you will pay him off. So if we take the basis, then the compensation will be based on the average remuneration, right? And for calculating the average remuneration, right, you will take into account the remuneration which is actually earned by that director, right, or the manager. When I say director, I'm talking about whole-time director, managing director, all of them, right, or the manager, for in the previous three immediately preceding financial years, from the date of his cessation of office, right? So you will go to immediately 3 years which is preceding the date. Sorry, it's not the financial year. I'm so sorry. It's not the financial year. From the date. So if I retire in October, if I leave my office in October, then from September to past 3 Septembers, 2 Septembers, right? I'll check the entire thing, and whatever I have earned, I'll calculate an average remuneration of that, and that will be given to him, right? But where he has held the office for a period shorter than 3 years, right? We see the limit minimum of either the tenure pending or 3 years. But now, if he has been there for less than 3 years, the tenure pending is maybe 10 years, right? But I haven't been in office for more than 2 years. So how do I calculate the average remuneration is the question, right? So what is the problem? If you cannot do it, don't do it. Calculate the average remuneration for the period which is available. So if I'm here in office for maybe 7 months, then for 7 months I'll calculate average, and then I'll split it over the other period. So I'll get a monthly average, and I'll give him the money based on 36 months, right? Or whatever tenure is remaining, whichever is shorter. Maybe there's a situation where the tenure remaining is just 1 year, right? So I'll just give him an average salary of the next 1 year. That's it. Right? And understand, mere allegation that a director was involved in certain questionable transaction will not disentitle the director from receiving the compensation. So you'll have to prove it that yeah, something like that is happening. Okay? So this was all about the text 199, 200, 201, 202. Right? But by the time we have completed this, there are a lot of case studies that have gone pending. Right? So there's another section also, 203, which is about the appointment of the key managerial personnel, KMP, that we haven't seen so far. Then 204 is also pending, which is about the secretarial audit of the bigger companies. And section 205, the functions of the company secretary. Right? But understand those three sections, why am I not taking up right now? Because first I'll take you through the case studies, and then I will take you through those three sections, because they are related to the CS and the other people. They're not related to the managerial personnel, right? So there are a couple of more lectures pending on this topic, on this chapter, but I think in totality what I'll be taking up is 4 to 5 maximum more lectures. I think it will be wound up in next 4 lectures, right? So I'll see you guys back in the next lecture. Until then, this is Abhinay Gupta signing off. Thank you and bye-bye.